morning, everybody, and welcome to the QuickBooks Desktop webinar presented by Veronica CPAs and Advisors Small Business Accounting Principal, Christina Binagi. Before we begin, just a few quick housekeeping items. All attendees are in listen-only mode. There is a chat box. Please feel free to enter questions there and we'll address them all at the end of the session. This presentation is being recorded and will be available to all registered attendees in the next few days. Now that we have that out of the way, let me introduce today's presenter. Christina Binagi has been with Veronica CPAs and Advisors for over 20 years. She's a certified public accountant as well as being certified in QuickBooks and Sage 50, just to name a few. Christina's accounting and auditing background enables her to provide clients with valuable financial statements, analysis, and internal control recommendations, making her a huge asset to the team. Now, before I spend all of your time listing all the great things about her, I'll hand the mic off to Christina.
Thank you, Kelly. Hello, everyone. Thank you for joining us this morning. Just want to toss out, this is my first virtual presentation, so bear with me if I fumble around a little. And I do want to mention too that all of you probably use QuickBooks every day, and I really just use parts of it, occasionally, and mainly do more reviewing and figuring out issues for people. So you may certainly have tips to share as well. Feel free to chat any of those tips to everyone as well. I also realized today that not all the topics might be applicable to all of you, but with it being virtual, figured it was a good time to do that because you could always hop on and hop off as things are applicable to you, or feel free to leave your video off and listen to what applies. So today we're going to talk about planning and budgeting, bank feeds, inventory and job costing, and we'll hopefully have some time left at the end for questions. If we do run out of time or I don't get to your question, please feel free to email me after the presentation. My contact information should have been in the emails that you have gotten or is at the end of the PowerPoint that you received. I will mainly just be demonstrating within the QuickBooks versus working off of the PowerPoint. That's more of a tool for you to look back to later with a few screenshots in it to trigger your memory, or it's a good place for you to take some notes on. I will be demonstrating today within the Premier 2021 product, except for in the job costing. I'm going to jump over to the Enterprise product, at least for showing you they have one special report in there that the Premier product does not have. So let's get started. Planning and budgeting and comparing actuals to budget is something that too many of our clients don't take advantage of. So let's take a look. You can create and edit budgets under the company planning and budgeting area in QuickBooks. There is a set up budgets option. This sample company that I'm in does have a couple budgets in here already. So this is how you would toggle between different budgets. But we're going to go ahead and click on the create new budget. When you create a new budget, you begin by specifying a year for the budget. This sample company is a little bit in future here. It's in 2025, so we'll leave the budget on 2026. Then you choose the budget type that you're going to have. So you can choose profit and loss or a balance sheet budget. Now, especially for beginners and the majority of people that do budgeting really focus on the profit and loss. So we're gonna use that. Then when you click next, it lets you choose if you want any additional profit and loss budget criteria. And you can choose no additional criteria, which means you're doing a traditional budget that's account-based based on your GL account. Or you can do some sort of a budget based on customer, maybe just a sales budget on by customer or by class. We're going to leave it on no additional criteria. That's the most common way, and go ahead and click next. So here are the ways you can start creating your budget. You can either do it from scratch. So it'll basically give you a blank empty template of all your GL accounts and the months and let you kind of fill it in manually. Or you can create a budget from previous year's actual data. And I'll show that method. And then we click finish. And here is our start of our budget. So basically, because we did a profit and loss budget, you're going to see all your profit and loss accounts down the left, just like we'd expect. And then each month of the year going across on the right, and it gives you an annual total column of where you're at. Now in here, this is your last year's info, so it's just a good place to start, especially if you're new to budgets, and edit from there. So as you want to edit, you can, in any field, just type a new amount in there. The other things that you can do to make that are a little more automated is you can click on the copy across down in the lower left, and that will give you that same dollar amount all the way through the year. So if you know an annual amount that you want to break out through the year evenly, that's what you would use. You also are able to adjust row amounts, and you can select whether you want to start in the first month or the current month that you're highlighted on. And what this, I guess I'll just select current. So you can select to increase the monthly amount by a set percentage or dollar amount. So if I were to put 10% in here, and that percent sign is important if you don't want to do the flat $10. And you'll see there's also this enable compute compounding. I'll show you if I do compounding, you'll see that, you know, each month is 10% up from the previous on a compounding method. Whereas if I choose another row here and say to adjust without compounding, it's, whoops, what did I just do there? Let me try that again. There, it's adjusting, I'm sorry. I had numbers in here already. It's adjusting each amount that was there and increasing it. Let me show that another way. If we just stuck 200 in here and adjusted the rows, 10%. Oh, because, oh, okay, let me do this, sorry. One of those brain fart things. We'll do it this way. 10%. That's what I wanted to show you. So they were all 200. They all just go up, you know, the $20. So it's a few different options to help you get there, but it really just acts a lot like a spreadsheet budget that you would create. So once you get all your numbers in here as you want them, obviously there's a little save here, and you save your budget. This one's now going to be our fiscal year 2026 profit and loss. And oh, sorry for the loud beeps. I should go turn those off. Okay. All right, so we saved our budget. Then the next key would be, what kind of reporting can you do with these budgets, right? So under reports, budgets and forecasts, there is a budget overview. And when you generate reports here, you got to be careful to select whichever budget you were looking at or want to look at. And here's the one we just did. And then depending on your option, this, in most cases, this is your only option unless you have like by class selected as your budget. And so voila, you basically get a report version of what we were just looking at, but now you can do a little bit of modifying to it as well, and how you want to look at it and what you want to do with it. Like you can dump it in Excel, you can collapse rows, which will collapse down your sub accounts just to just the parents, or expand that back. And then the other thing you can do right now, this show columns is set on month, and you can edit that and change that to say quarter. So it'll just show you quarterly. So whatever view you want to see, or just at a grand total annual view. So you got some options there. A couple, then the other reports that get more exciting are more the budget versus actual. And we'll select our same budget again. And now our 2026 doesn't have any actual data in here yet, but if you had actuals, all these zeros would be your actual compared to your budget, and you have your dollars over under. And again, you can do similar customizing, whether you want to look at it in a month view, total view, quarter view, and things like that. And you also, under customize, have a few options, like maybe you don't want to see the dollar difference or the percent of budget. You can uncheck those columns and just get actuals and budgets, whatever you prefer. The other report options are going to be, there's a profit and loss budget performance. And here's what that looks like. That gives you, say, current month versus a budget, and year to date versus budget, and just your annual budget. And there's one more in here. I'm not sure how helpful this is. If it's got to be that you like the what they're giving you for the graphs. Graphs are always fun, but there's not a lot of manipulating you can do to these graphs. But you can change the dates that it's showing you, but it gives you, a budget versus actual by month. And then you could also get a, sorted by, this one's sorted by account. The top one's sorted by month. And then you can also do something by classes. So there's a few different views in case you like those graphs, they're there. All right, so let's get us back here, make sure I didn't miss anything. Maybe I'll just show you too, if you come back into planning and budgeting and you just want to edit a budget that's in here, here's our 2026, you can come back and edit it and save it again. And that will be all live. Just to show you a profit and loss budget by class, it shows you the class that you're currently addressing up here, and then you can toggle to the different classes and do your budget by class. Then, not that it's a lot different, there's also a forecast you can set up. Now the forecast works just like the budget. You'll have any options that you have saved available to pick from. And when you create a new forecast, again, you pick your year. Then you select your same criteria if it's just by accounts or if you're involving jobs or classes. And has all the same edit and save and capabilities. Under reporting, what you have available for those forecasts, there's a forecast overview. Again, very similar to the budget, just gives you the monthly forecast, but now you can do a little bit of manipulating or dump it to Excel and things like that. And the last option for reporting in there is a forecast versus actual. Again, very similar to the budget versus actual, and you can do the same kind of modifications. Clean up a little here. And give me 1 second. I'm just going to get a drink. All right, then we will move on to bank feeds. Like I said earlier, I'm not going to use the PowerPoint as I talk, but there's just a little moment right here where I can't show you a few of these things in the sample company because it's showing you how to link to a bank, and you can't do that with a sample company. So I'll just talk for a couple minutes and then I'll show you what I can on the bank feeds in the QuickBooks. The bank feeds are a way to simplify your daily and monthly data entry. They help ensure accuracy by automating data entry or reconciling, which helps avoid typos, etc., slipping through the cracks. You can link not only deposit or checking accounts, but also credit card accounts. It works by one of two ways. You either download a file from the bank site, which is more called a web connect, or you can use a direct connection that's more of an automated sync. And which you go with is a lot of times more up to what the bank capabilities there are or what you feel comfortable with. Not all banks support the bank feeds, and some may charge fees. Bank feeds are ideal for credit card activity because you can actually almost use the bank feed information to record your activity for you. Whereas typically with checking accounts, you've already recorded checks by printing them out of your QuickBooks, or recorded all your cash receipts, and you have most of your transactions in there already. And in that case, it's really acting more like a matching, reconciling feature for you. Transactions that are affiliated with a bank transaction, it was downloaded or sunk, are marked cleared for you then in the bank reconciliation, which makes that process go much faster, basically. It's almost done for you. But it is still important to do that reconciliation, because sometimes there are things that slip through. You could have made a mistake with the downloads and added a transaction that was already in there instead of matching it. And that's what the bank reconciliation will still catch then. So we can't demonstrate the link to the bank, but your PowerPoint shows you a sample online banking screen where you can select to download a QuickBooks file. That's just a sample of one bank's website. They all look a little bit different. And then just tossing out one thing to be careful about if you do set up bank feeds for the first time. Sometimes when you grab that download file, you don't have a lot of, we'll say or can't maybe choose the dates you're selecting. And it might be set to default to pull the maximum amount of transactions the bank will allow, which is commonly maybe 90 days. So the very first time you do that, if you've already got everything reconciled for the first 60 days of that 90 days, you just have to be careful not to double up all those transactions in your QuickBooks. And there's an option to ignore those transactions and kind of get them out of the way. But if you have any questions ever with setting it up for the first time, certainly you can reach out. We can help you out. With that Web Connect, once you've downloaded the file from your bank, now we can kind of go show QuickBooks a little bit. You'd go to File, Utilities, Import a Web Connect file. Now it's going to tell me I can't because it's a sample company, but that's where you would do that process. As far as setting up the automatic Direct Connect sync, under the banking menu, under bank feeds, there's an option to set up bank feed for an account. Either way, when you start these, the first time you do it, QuickBooks will give you a pop-up box and ask you which account you're trying to sync with. And that just means you have to select which bank account or which credit card account you're currently matching that to. All right, so now let's take a peek at what this looks like. This sample company does have, under the Bank Feed Center, some sample data for us to see in there. For example, so on the left-hand side, we're seeing Anytime Financial account number ending in 1244. So that account, I can tell by this download transactions, is more set up for a direct link. Now, obviously, I'm not truly linked to a bank, so I can't download anything, but that's how you would get your new transactions in there. Now, this other Anytime Financial account has some transactions that we can look at, for example. So this is what would look like once you've downloaded or sunk those transactions. You will see across the top that it says there's 6 transactions that need review, and that color kind of matches here, the orangey color. And there was one transaction that was automatically matched. So QuickBooks will try to take anything from the bank and find a transaction existing in QuickBooks and say, oh, we found a match. Now, you definitely still want to review those matches because sometimes there are, mistakes that it might make. And then if we want to review, sorry, I'm just going to hide this for a second. I'm going to move my face out of the way so I can see. Okay. So if we are looking at, let's say, this $3,200 check here, it's always good when the bank has transactions that it didn't find a match in QuickBooks. It's kind of a good idea to second guess that and go, wow, is that really a transaction that I wouldn't have already entered in QuickBooks? Or is it just not smart enough to find the right match? And under this action column, we can say we want to match to existing transaction and we want to see what it's looking at and why did it not find a match, okay? So this is giving us all the transactions available to be matched. And I'm just gonna, if you click on the top of the payment column, it will sort by dollar amount one way or the other. All right, so we're looking for $3,200, and there is one here for $3,200. And if we kind of look at it, like, what's the discrepancy, right? This has a number 451 dated November 14th, 2025. Well, here's the issue. The dates of the transactions that are downloaded, just because this is a sample file, I think, show 2003 instead of 2025. Okay, well, let's pretend that those dates truly is a match, and it's just a little glitch somewhere that it's not grabbing that. We can tell it that we want to match with that line and confirm the match. And now that one goes away out of our review ones, and it's all matched. And there it is shown over here that you could go see it in the register. So that's kind of how the process works. Now, if you had, say, your bank service charge, this one might be a good example that, you know, you probably don't enter that until you are looking at your bank statement. So this one, you could just choose to, you know, add from these downloads. And what you would do is you'd say you want to do a quick add. Now it's going to yell at me and say, hey, we don't know what account to post this to. And if you don't, you know what count, some people do choose this uncategorized if they're not sure what it is until they figure out what it is, or maybe it's a question they want to ask accountants about, so at least it puts it somewhere until they get to address it. But typically you're not going to use the uncategorized, so you're going to say no and go, oh, I got to put an account in here. And I'm just going to go randomly. We'd want bank service charge. I just saw it. And you can put that in. And if you have a class, you can fill in that as well. And any additional, there is also a add more details. You can see a little more. You can also add a number, maybe a memo if you want to put more information in there. So that is how that works. Now, because of my funny dates in here telling me it's in a really old closed period, but that's fine. I'm just going to say no. So that's how those work. Give me a second here. Oh, there's one more thing I want to touch on. There are some rules that you can set up. So if we say we want to add a new rule, I could have a rule called gas, for example. And anytime the bank description contains, we'll say BP, and we can actually click the plus and we could do more. We could say BP or mobile. Then we want to categorize that to a certain account. And here we could pick wherever we want our gas. Go to here, fuel expense looks good. So then anytime there's downloaded transactions with those descriptions, it'll automatically get those ready for you. And this would be common to use probably more on the credit card side than the bank side, but you could also use it for things on the bank side, like bank service charges, for example. So it's just to automate the process a little further. That just say I didn't read it, sorry. Up was how to handle the rules. It also wants you to rename it. Where's actually you could set up a general gas vendor, or I'm just gonna pick one. There we go. We'll just do that. Now I lost that. Bear with me for a minute. We're just going to select the miscellaneous quick account. And I'm not sure why it's mad at me. This is one of those things that I don't do it all the time. I think I just have to have those flip-flopped, but you get the idea. So now one other thing I'll mention is under preferences, there is an option of how you want to view and enter your downloaded transactions for bank feeds. There is a classic mode, which is more of a register look. That is, I think, just the original way they did this. Then what we're in is the express mode. And then this advanced mode is actually new to 2021 versions. And it just seems like it's a little different view. It almost looks a little more like QuickBooks Online, if you ask me, and it has apparently a little stronger rules options in it. So just something that you can be aware of to look at. And what I mentioned earlier, we haven't done a lot of matching, but when you go to do your bank reconciliation, banking, if you have used downloads and stuff, it'll automatically clear things in here for you and make your bank reconciliation process a lot faster. But it is still important to do this process. I would say that of clients that I have with bank feeds, probably a little more commonly, I see it a lot more with our online clients. One of the areas where pitfalls happen the most is when there's a payment from a bank account to a credit card that's electronic. And when they choose to add that transaction versus having it entered to match, they add it at the checking account level, and then they add it again at the credit card sometimes and double up those transactions. And that's one of the pitfalls you'll catch doing the actual bank reconciliation. I think that's it for our bank feeds then. So we can talk a little bit about, or for a while, about inventory. Kind of a bigger animal in QuickBooks. So item setup is very important in QuickBooks. This setup will determine where things post, and in inventory case, whether the item is included in the inventory listing and inventory on your balance sheet, or whether it's posted as an expense on the profit and loss. So let's take a look at the items. Under lists, item list, there's various, under this type column, you'll see there's service items. This type is for a service you provide to a customer. You can create a service that's charged by the job, like a flat rate, or by the hour. A service item can be used in an assembly bill of materials, or it can be used in job costing to capture time on a job and used to invoice a customer. We'll talk a little more about those in a moment. Then we have the inventory part. This is your traditional stock inventory type item, something that you buy for the purpose of reselling or assemble or make to sell. This item is not available if you haven't enabled inventory in the items and inventory section in preferences. So just want to show where that is real quick. Inventory here, and on the company preferences tab, you have to say that you have inventory, that it's active here. So, all righty. Then we have non-inventory parts, and non-inventory parts are things that you purchase, but maybe do not resell exactly like a stock item. You might purchase them directly related to a job. These are things that you would not track in your inventory listing. They could be nuts and bolts, for example. Maybe you have them out on the shelf, but they're too small to track the quantity of and assign to jobs and things like that, and you just expense them as you purchase them. Then you would use a non-inventory part item type. We also have group items. These can be used to enter a group of items, all that must exist in this item list at once. If you frequently have a shipping charge accompanying another type of charge, you can create a group item that includes those two items. We'll talk a little further on group items in a moment as well. Then we have, I think I went past it right here, inventory assembly. This is an item where you assemble from parts, and it can include some labor. So it's basically like a bill of materials type item. Some of the other items here, they're important obviously, but not so much to the inventory. But and other charges used for things like, say, shipping charges, markups, or other line items that appear on invoices. There's a subtotal type item, which will add everything that comes before it. It provides a subtotal before you add shipping charges or subtracts discounts or prepayments. There's also a discount type item that can calculate a percentage or be a flat rate. The payment type item you can use to indicate on an invoice that a payment has already been made. And of course, sales tax items and sales tax groups are very key to your sales tax setup if that's applicable to you. So let's talk about creating a new item. It's a little unusual to me that QuickBooks does this, but a lot of times down in the bottom left, you'll find some options on a window. In this case, if you want to create a new item, if you click on item, you can select new. And here's where you're going to select your item type. And like I said, these are key to get right so that things not only post properly, but there's also some restrictions on changing an item from one type to another. There's restrictions in some fashions. You can change from some item types to some other ones, but you can't change other ones. Yeah, that just sounds funny, but we'll show you that in a little bit too. So let's say we're going to do a new service item. We'll just do service. And if it's a sub item, you could have categories that you group your items in different categories. You could use that as well. And if they're unit of measure, this is if you're going to have, you buy it in cases and sell it in eaches. That's when you'd want to be careful here and make sure to address those options. Now, obviously, that's not applicable to a service type item. This little checkbox right here is very important. The service is used in assemblies or is performed by a subcontractor or partner. You'll see when you check that box, it gives you the option to have two different accounts, an expense account and an income account for the item. So a service item could be an item that we're going to use to bill a customer on an invoice. And in that case, we'd want it to post to an income account. But if we're paying a subcontractor for this item, well, then it's an expense. So a lot of times, I would say, even if you're not sure you're going to use it both ways, I think it's good to set it up this way, because you're not going to think about it down the road when you start to use it on a vendor bill where it's posting to, right? So you'd want to pick an expense account. I'm just going to pick random accounts and an income account, and then any applicable costs or selling prices. And you can type descriptions, and you can have a different description that is used on purchase transactions than is used on sales transactions as well. And that's the other way you can add an item is just by right-clicking in the item list and selecting new. And now you have your options here again. And I'm going to show you, let's see. If you want to edit an item, you can right-click or use the menu in the bottom left. See how this service type is grayed out? This is an example. Once it's a service item, you can't change it to any other item. Now, if you find that you made a mistake and messed up and used the wrong type, what I would suggest is, edit your item name so that it's, put a junk in it or some other, so that you can still use that same name. And then you'll want to inactivate that item so you don't use that one. And then you can create a new item with the same name and the proper type. That's how you get around fixing your mistakes, I guess. When you want to edit an item, let's say inventory item. See, an inventory part, you do have some options to change. You can change an inventory part into an assembly, but that's your only option of a change there. Let's say you want to change the income account it's been posting to, or say you had accidentally selected a expense account here or something. For whatever reason, you're going to edit that. If I change this, say that. And it's going to pop up and ask you and say all future transactions will be changed. Do you want to change existing? I would suggest if you're going to do anything changing the existing, that you definitely make a backup first, so that if you don't like what happened, you can go back and try again, or rethink what you did. And also, I would be careful, even if you think you're safe because your closing password is set. I wouldn't totally rely on that. Now, maybe you do want it to change all those existing, and it's totally fine, and that's a-okay. But if you're going to do any significant item changes, you know, or a bunch of them, I would just be careful and make a backup to be safe. Another thing you'll see in the options in here is there's custom fields. The sample company has set up color and material, but you can actually define fields and add your own here as well. These fields are just something you're able to actually include them on certain reports. So if there's any information that's helpful to you to have in there for your items, you can by all means populate that information. And give me a second for a drink here. I can actually maybe just quick show you an example of what I was talking about. I have a presentation item that I set up. Presentation labor. So I used that in the customer center on an invoice. Let's see if I can find it quick. Well, let's do a new invoice. And we're going to select a presentation labor. $120, and we're on December 15th. And when I go to a general ledger on the 15th. And I just want to show okay, hold a moment. Sorry. Presentation labor. Oh, so I do have it on design income. And what I actually wanted to do, because I have it on income side, I want to show you the vendor side. Flip-flop my brain there. So we're going to do a bill and say that we are paying for presentation labor. $120. And go back to our ledger. And you're going to see, so the Abercrombie was our customer invoice, and that properly posted a credit to our sales account, our design income. But that bill posted, you know, an expense in our income account. That's where it's important to have that checkbox in that item set so that things will post properly. So in my presentation labor, I should have checked this box and also gave it an expense account in case I use it on an expense type transaction. All right. So let's say you haven't used inventory yet, or you've got a lot of new items to add, or you have a bunch of modifications to make because you're going to clean up and use things properly. Instead of going in one by one and editing every account or adding new accounts, there's also an option under lists to do add, edit multiple list entries. So in here, because this area is for all areas of QuickBooks, you'll want to go and you can select either service items, inventory parts, non-inventory parts, or inventory assemblies. So you would need to do each different type of item separately. But now you'll see you have a spreadsheet view, and if you wanted to make edits to which account these are posting to, you could change that there, or add expense accounts, make things sub items. You could do those kind of modifications in a more efficient manner. Now you can also, we'll say, import or copy into this information from a spreadsheet. So if you've got 50 items to add, you can organize your columns in your spreadsheet to be similar to the setup for this window and copy and paste those in. And you do have the ability to customize what columns are showing in what order to help with that. So that's kind of a neat idea there. So we talked about changing items. So let's just walk through real quick. We did it a little bit, but let me close all these windows. All right, so let's say you've set up your items under the vendor center. You can select a new transaction and say you want to do a purchase order for one of your items. You just are going to fill in your details of your purchase order, your dates and that, and go ahead and select whatever item. Maybe we're ordering some cabinets. And this transaction, being a purchase order, won't actually affect anything in your ledger, but it's a document you can use to forward off to your vendor for that purchase. And then I'm watching which vendor I got this from. You can save and close. Now, when I get that product in, I can say I want to receive items and enter the bill. So keep in mind, you do have, we'll come to that in a second. So if the customer or the vendor has a purchase order outstanding, QuickBooks will try to tell you, hey, you should match this with your purchase order, and we do want to receive against our purchase order, so we're going to say yes. And we'll, I think it was that one. No, it actually wasn't, but close enough. Or here it is, cabinets. So here's what you have to be careful of. You have the expenses tab and the items tab. Items are definitely you're going to want to use for anything that you set up an item for. Expenses can be more, your WeEnergy's bill or anything else that you just haven't actually set up an item for. So we selected our cabinets. Then once it's tied to that item, it'll use the account and everything that you have set up with that item. So we're receiving our 20 cabinets. The price is $400. Make sure that matches our invoice. We'll enter our invoice number, and we're ready to roll. We'll save and close. Let me mention one more thing. Up here there's a bill received. QuickBooks automatically assumes you received the invoice when you're entering this. Let's say you've got the product, but you haven't gotten the bill yet. Some of the little more sophisticated companies do that. If you uncheck this box, QuickBooks will still recognize that there's a liability and the inventory, but it just doesn't have an invoice number yet. And it's waiting for you to come back in and edit this and enter and check that the bill's been received. Then it puts it in under the vendor with its invoice number and everything ready to go. I do want to caution you, there's a little bit of a timing issue here. If you're a clean cutoff company, let's say you did that item receipt and dated it, 11/29, but then your invoice didn't come till December. If you come in and change this date from November to December when you get that bill, now your November financials that you may have finalized are going to look different because you've edited and moved that transaction to December. So do be careful with that if that's something that you use. All right. And then on the customer side, if you saw the customer center, if we do a new transaction and we're invoicing a client for something or a customer for something that was in inventory, we can come and select that item. We may have an estimate or a sales order set up. We don't in this case. Let's just say that we sold a cabinet 2 of the cabinets that we bought. So this transaction would then reduce that quantity of our cabinet inventory item, which had been increased when we purchased them from the vendor. That's kind of just a quick walkthrough of that. The important part is truly that setup being accurate. So let's go for a moment then to talk about some groups and assemblies. You do need QuickBooks Premier or Enterprise to have the assembly functionality. But as a firm, we don't typically recommend anyone gets the lower level product anyway. So most of you probably have that capability if it's of interest to you. So back in the item list, if we say we want to do a new item that is an assembly, you know, we have more options here than a standard inventory item. Obviously, we have this extra section down here of the bill of materials. And you can have 100 components in here in the Premier and up to like 500 in the Enterprise. I'll show you a completed one in a minute, but just gonna give you an idea there. And then I wanted to mention down here, you give your inventory account on an inventory or assembly item, and that's fine. And your minimums or maximums for building or reordering. This on hand or total value, I'm going to caution you from entering information in there. If you need to change the quantity on hand or a value of an item, you're going to want to do that or set that up by doing inventory adjustments. It'll just work a lot better in your GL and everything like that. So don't really fill those in yourself at all. So if we look at an assembly already set up, you'll see that I can have an inventory part in here. I can have a non-inventory part. I can have a service item, which can be some labor, you know, as we're building whatever we're making here with our door and our trim. So that's one difference you'll hear from groups as well. 1 second. File is cooperating. And then I'll show you what a group looks like that's in here. So here's a door set group where you could have some hardware in a door. So it's kind of a group is maybe used a lot of times for a kit that you might just put, you know, grab the couple components as you're going to ship it out. Whereas an assembly can be used for that same thing, but assembly can also be used for items that you're gonna make and stock on your shelf till you sell, or items that your kits you're gonna put together and stock on the shelf until you sell. The assembly is different in that the assembly will be included in your inventory listing. A group will not. A group is almost more like an invoice template, kind of shortcut for you. All right. And when we want to build an assembly, I know this is a little odd. Under vendors, inventory activities, you can get to an inventory center. In the enterprise version, they actually have an inventory center as an option right on that top menu, but under vendors, you can get there. So one of the new transactions that we can do is build an assembly. You can also get there just from going to vendors, inventory activities, build assemblies. So let's say we're going to make some of our test assembly. So I'll make that a little bigger. So QuickBooks tells me that I have, you know, I don't have enough. I have -9 of these on hand. But so we're gonna build some. Oh, that's the build point. So we have 8 on hand, and I apparently didn't. It says we need 0 quantity because I haven't said how many I want to build yet. So down here on the right, which again I feel like is a weird placement, but we're going to say we want to build 10 of these. Oh, and it's going to tell me, hey, you don't have enough on hand of your components to build 10 of these. Then you can make this a pending transaction, or you can say, okay, well, maybe I'll just make 5. Let's see if that works. Oh, I don't have enough for 5 either. Oh, I can make 1. So we're going to make 1. We can make a memo. And when we build and close, this will add to my inventory that I have 1 more quantity of the test assembly item. And it will remove my components. It'll reduce my wood door and my trim quantities. And it will credit the account that my labor item is posted to, because now I'm adding some dollars to inventory that I'm pulling out of expense and saying that I've got some asset inventory asset value there. So I will build and close. That's how you build the assembly. Now, when you go to a customer invoice and you're going to invoice for an assembly, test assembly, it tells me I need to make some. It won't let you build them without having enough components, but you can sell more than you have in QuickBooks. You know, not sure that that's a good idea, but it does warn you at least. So I'm going to sell one of these, and you'll see that I just get the test assembly item, and I can't, I mean, I can type some more description on here, but I can't change what's in that assembly or how it shows. I'm just going to get how that item populates. This description would be the description I entered in the item setup. But if I was going to build them for a group item, we'll say this door set. Now I get all the components of the door set, and I can edit this on the invoice still at this point. The only way that I can edit what makes up an assembly item is back in the item setup by changing the bill of materials. So that's kind of how these are different. And when I invoice a group item, it's not going to affect my inventory balance at all, because it won't affect a group item anyway in inventory, because the group item isn't in inventory, but now it will remove the components that were inventory items. So the standard doorknobs that are in my listing, that's going to reduce by the number of doorknobs that I have on this invoice in this group. So groups are almost kind of a tool just to maybe make your invoicing a little quicker, and maybe kind of grab a few things together that you might sell commonly together. And the assemblies are more of you're actually building something to stock and inventory and to sell and track that through the inventory. Get a drink for a second. I should mention the group items are available in the Pro version. If you do have Pro version and you don't have assemblies, you might be able to have group items help you get by on trying to do some assemblies a little bit. All right, we talked about adjusting inventory on hand. How you do that under the vendor sender inventory activities, adjust quantity or value on hand. So in here, you have the option to only adjust a quantity, to adjust only a value, or to adjust the quantity and the value. If you do just a quantity, obviously watch your dates, and then the adjustment account is very important. I've oftentimes seen this account where clients select the wrong account here. Some clients will select inventory. And what's wrong about that is QuickBooks knows it's going to affect your inventory if there's dollars attached to this transaction, right? If it's just quantity, it might not. But you're telling it the other side of the transaction. So cost of goods sold would be a good place. And maybe you have an inventory adjustments account in cost of goods sold, but you don't want to select inventory here, or the transaction will just debit and credit inventory. And then you'll actually have a problem, because your inventory listing will be affected, by the change you're doing here, but now your GL isn't changing. So you'll have a discrepancy between your balance sheet inventory account and what your inventory listing total is. So you do not want to select the income or the inventory account here. And another account that I've seen these hit sometimes is in the equity section. I'm not sure, maybe it's set to default to that in QuickBooks sometimes, or why that gets selected, but sometimes clients I've found these adjustments in their equity section on their balance sheet. All right, now you won't use, if you're just trying to adjust the quantity or value based on your inventory listing, you're not really going to have a customer job for that type of transaction. And you may have a class if you're doing class tracking, where you're going to put that. So let's say we want to change the cabinet item. So it's going to tell us how many QuickBooks things are on hand. And then, oh, we know that that count is off. It really should be 19. We'll enter in our 19. And in the bottom left, it's going to show us what the, after the adjustment, what it's going to be. And it shows us our average cost on that item is $20. So you will have a $20 adjustment to your inventory listing by changing that quantity, as well as to your inventory balance sheet account will go up to $20 and reduce your cost of goods sold account. Now, if we had said value, it tells us what the value of those 18 are. And if we're saying, nope, that value should really be 400 or maybe 360 because, we got one free or something, then it'll adjust. Sorry, it was 360, so 320, we'll say. It'll adjust that down $40 in that case. And if you do value and quantity, it'll give you both fields to populate and edit as needed. Now, let's say you do your physical count at the end of the year. You don't have to do one item at a time like I was just showing. You can do your whole list of items that need adjustments from your physical count all in one transaction. Or at least you can fit a fair amount in. Maybe you wouldn't fit all of them, but a fair amount per transaction. The way you would use this customer or job here is, and we'll touch on it a little bit later in job costing, but if you are doing job costing and you have stock inventory items that you want to allocate to a job, that's how you could say new quantity will be 17 cabinets because we're allocating one to, whatever job. So it pulls it out of your stock inventory and adds that cost to the job. And then we just mentioned I'm going to show you where the physical inventory count sheet for doing your year-end is also in this same inventory activities menu. And it looks like this. A couple tips here. Probably a good idea. You could dump this out to Excel and save it. You may or may not want to hide the quantity on hand when you print this out for someone to go make the counts out in the warehouse. A lot of times, some people don't want the employees to be able to cheat and not count and just say QuickBooks is right. But at the same time, if they have it handy and they're only finding 200, they might keep looking and find another spot where the other 200 are or whatever. So it could be handy either way. The other key when you're doing a physical inventory and making adjustments, if you have printed out this inventory worksheet and you already had some items that, they just shipped out this morning before you printed this, but you haven't invoiced the customer yet, well, QuickBooks in this sheet doesn't think they're gone yet, right? But yet you're gonna compare a count where they are gone to a count where they're not gone. And when you're gonna adjust that count, but then QuickBooks, it'll change the count again when you do that invoice. So you're almost comparing, apples and oranges because of that timing. And same idea, if you have received in product that you're going to be counting, but you haven't entered that vendor invoice yet, you could have a discrepancy. So you have to be very careful that all of your transactions related to the stock on the floor are in QuickBooks. Then you print the worksheet, and then being careful not to add new transactions for those items into QuickBooks before you do your count adjustments. That's what I know there. Then inventory, let's talk about inventory listings and reports. Under reports, inventory, there's an inventory valuation summary. There's also a detailed version. This would be the report that I would recommend that each month you take a look at if you have inventory and see that your total asset value is $22,000 in this case. Now I would generate it as of an end of month, but you want to make sure that that value matches the inventory balance that shows on your balance sheet. We have had many clients where there is a discrepancy there. And one of the reasons might be this little checkbox right here, show inactive inventory items. Now, sample company doesn't have any, but if you had an item that you're like, oh, you know, we never use this anymore, let's inactivate it. But let's say that item still had a quantity of whatever, one out there for $100. Well, if you inactivate it, it's not going to be included on this report unless you check that box. So highly recommend that if you're going to inactivate any items, you make sure their quantity is zeroed out or go ahead and adjust it to zeroed out if you're tossing it because it's obsolete or whatever, so that you still maintain that reconciliation between your listing and your balance sheet. It's also important, oftentimes, like I said before, it did let me sell more cabinets than I had. So you want to watch and make sure you don't have any negative quantities on hand. Like, see, my assembly down here is negative. Well, that's a problem because we can't have negative out in the warehouse. So there's some sort of inventory adjustment or correction needed there. The other way that you could have a discrepancy between your balance sheet and your inventory listing is if you do a journal entry, which I can just, so it will allow you, QuickBooks will allow you to do a journal entry to your inventory account. And I have not told it anything about an item here, right? So now I've changed my balance sheet inventory balance, but nothing changed on my inventory listing. So you're going to have a discrepancy. So those are all reasons, but it's good to watch that those are hand in hand so that you can rectify any issues sooner rather than later. Another report that's under inventory is a stock status, either by item or by vendor. This report shows you a little more detail about the quantities, your minimum or maximum on hand, your sales order, what's on a sales order, what's waiting for assembly, what's available, what you might have out on a purchase order, and maybe in your sales for the week. So kind of some fun data there for you. And then you can also get the physical inventory worksheet here. And the last report here is the pending bills. So if you had a build that didn't have enough components on hand, this is a report to come and check to see that, hey, we're still getting our orders moving because we're taking care of these pending builds. When you have a pending build, if you have enough components, it will let you remove the pending status and build and close. So this is just a good report to watch and make sure none of those get forgotten. You can also, just to show you in the inventory center, you can also get some of the reports here. Quick reports, physical inventory, stock status, inventory valuation. Kind of like everything else in QuickBooks, you can get to the same place many different ways. So let's talk a little bit about job costing then. In our customer center, you're going to see any of the indented names are jobs under the customer that is directly above them. So you can do some job costing without setting up separate jobs just to the customer, but as many clients of ours would have multiple jobs to the same customer, it's a much better idea to set up that job underneath the customer. Under this little new customer and job is where you can add a new job. You can fill in any of the appropriate, contact information. And the thing that's a little different on jobs is you can have a special job description. You're able to group your jobs by type, because there's certain reports that you can do for just your new construction jobs or just your remodel jobs, as these are some types that are set up in this sample. Job status. There's various job statuses you can select from. And actually these job status names can be changed and customized under the preferences. I can just show you where that is quick. Under jobs and estimates, company preferences, here's those. So you can change those terminologies to what you might use at your company. There's also a preference that you create estimates. I would suggest that you use those if you're going to look at your job actual versus estimates. You would have to. And if you do progress invoicing, and some typical don't print things less than 0 or warn about duplicates. All right, so then we have some dates that you can enter in the job: a start date, projected end date, or an end date. QuickBooks isn't smart enough to do a lot with these dates, but you certainly can use, they can be populated on reports that can help you out as long as you're diligent about updating that information as things change. So we have a new job. That's how you create a new job. Then, like I said, it's best practice to enter an estimate for a job. Now, you might say, we have various clients that do the estimating process outside of QuickBooks and maybe another software or something. And if that doesn't integrate here, I would say at least still enter a summary of that estimate into QuickBooks so you can still get that actual versus estimate information in QuickBooks reports. So under new transactions, we can say we're going to do an estimate. And we'll just say we're doing an indoor door kit. How's that? So let me make this window a little bigger. Put a quantity of 2 in there, $100. And now we have an estimate. We could, this is our cost. So our markup, we can either override our total here to be invoiced, or we can say, we're increasing you have some set prices for different customer levels, or we can just say, oops, $205 markup, or you can do a % markup, or however you want to do that. So that's a very simple estimate. And just to give you an example, they have some other more complex ones in here. Grab one. Oh, sorry. I'm going to jump over to the enterprise that is set up as a contractor company. So in their estimate, for example, it can be as complex as this, where you're doing each part of a project, the flooring, the framing, the electrical, right? And when you do your estimate to this level of detail, you're going to want to make sure you're entering your actual costs at the same level of detail to get your best information, whether it's your service items on your payroll at the different, labor of what they're doing when they're working on the job, or the different items you're purchasing to use on the job, and all that. All right, so you have your, oops, sorry, bear with me for a second. So now we have our estimates. So we're going to want to assign costs to the jobs. And as I just alluded to a moment ago, when employees time is being entered, you're going to want to assign that to a job. So in the enter time window for a weekly timesheet, oh, hold on one second. Close this QuickBooks. Sorry about that. I lost my screen sharing for a moment. Okay, I think we're back to one QuickBooks open, so it should let me do what I want now instead of telling me I'm in a secondary company. Okay, in an employee timesheet, this is what you kind of want to show. So you pick the job that they're working on, and the service item that they were doing, and what payroll item that corresponds with, and the time for the week. Then you'll see off to the right, there's a billable checkbox. So billable check, that would assume that when you're going to invoice that customer, you can actually select to attach the specific time to that invoice. But I'm going to say that in a scenario where we're doing a whole big job that we did a big estimate on, we're not actually bringing that specific time into that invoice. We already have the estimate that we're going to be held to for billing. So in this case, we would, if that's what we're doing, we're going to uncheck this, because otherwise there's a report out there for billable time not invoiced, and that time will sit out there forever. But if you are doing more of a time and materials job, and you are actually going, you don't have a set estimate that you're stuck to of a certain round dollar amount, then you will you can choose to leave that time as billable, and I can show you how we attach that to the invoice. Now QuickBooks will not, you will not see the time, the cost in the job from that time until that employee has been paid. That's QuickBooks kind of their trigger point to know that that's a true cost for the job, is that the time has to be paid. Obviously, there's a lot of clients of ours that are using third-party payroll services, which makes that seem like there's a problem, right? There is a workaround that you can still use timesheets kind of in a way like they're a vendor 1099, and kind of do a fake check to them and get that time into jobs. Or you are able to actually code time into jobs with a journal entry. So what you would do is you can select the same account that you're going to debit and credit. You could debit and credit wages account, but then whatever dollar amount of that wage that relates to a particular job, you put the job on that line and the applicable dollar amount. So let's just kind of show you. We'll say here, say $100 of that time goes to that job, and $500 goes to another job. And then you would just credit the same account. So there's no change to your ledger balance, but now you're assigning costs to the job. You can do this to get your labor assigned to a job. You could also build it right into your payroll journal entry if you wanted, versus doing it separate. And you could also use a journal entry like this to get different, maybe overhead type costs into a job. So that's for the time. Then let's say we're purchasing something, we can enter a bill, and we can say that we're buying whatever this is relates to our specific job. And again, here's that billable or non-billable. So just have to think whether that's applicable in your circumstance or not. And that's how you get other costs from vendors into the job. And as I alluded to a little earlier, if you need to take stock inventory and assign it to a job, you will use the inventory adjustment and adjust the quantity down and select that job. I'm just going to quick turn that loud beep off on this sample company. There we go. So then when I mentioned invoicing the job, right? So let's say we're going to do a new invoice for Heather Campbell. And when we get in here, and once you tab off that customer screen, it'll tell you if there's any estimates out there related to that customer that you might be wanting to bill. So we're going to say, yep, we want to bill based off that estimate. And it will give you some options. You can either create an invoice for the entire estimate, a percentage of the estimate, or for selected items or different percentages of each line item. We'll just say 50%. So the whole estimate's 100, it prepares an invoice for $50,000. And that's how you can invoice a job with an estimate that way. Now I'm not 100% sure which one has, let's see, has time on it, but if you're going to invoice for time and costs, let's just say cancel here. This add time and costs, if you select that, will pop up a window that will then give you any time that's been marked as billable to that job, or any expenses or mileage or particular items. And then you would just select which things and it'll add those onto this invoice. I can see if I can find, let's find one that has time in it just real quick. And that was December 15. Look at this time back a little bit. I don't know if this time has been paid, so that could be the issue. But that's how that would work to add the time to the job. What else we have? Then we have our job cost reports. This is kind of the best part after you do all the work of putting all that specific information in. There is a lot of job reports you'll see here, but the most common, the job profitability summary, is one of the common ones. This will show you just actual cost, actual revenue. If you didn't put estimates in, you can still get this information, and it's still valuable information. Then you also have the job estimates versus actuals, and there's a summary and a detailed version. This is exciting because you see the estimated cost, actual costs, the estimated revenue, actual revenue. To me, this is the best information you can get, from jobs in QuickBooks, which makes the estimates kind of key. So you can watch how your jobs are doing. If you're having a rough year, you're losing a lot of money, but you haven't tracked information by jobs, you don't know what job was the cause of that bad year. This way you can kind of keep tabs on it throughout the year and watch what's happening. Also, the special report that's in Enterprise only is this job WIP summary. Now, depending on your accounting method, this may or may not apply to you. If you're just a completed contract and you don't record any revenue till the job is done, this might not matter for you. But if you are on the percentage of completion, so which basically means as you're 58% done with the job, you're able to recognize 58% of the revenues or in gross profit on that job. This report can be very handy to get you the amounts that you need. There's a journal entry that would be done. QuickBooks won't automatically do the entry, but there's an entry that would be needed to add an asset of billings in excess of costs, or costs in excess of billings, or both, related to your projects in process. So that may be valuable to you if that's applicable to you. And there's some tips to keep tabs on for these reports. This work in process summary will give you all jobs that have an active estimate. Once your jobs are done and need to fall off your work in process reporting, then you're going to need to go into that job and inactivate the estimate, which is as simple as in that customer center. Let's find an estimate. And there is a mark as inactive, and that is what would remove that from that report, or any reports usually showing estimate versus actual type information. And then you want to be careful with your dates as well, because you might need to be looking at jobs. If your jobs cross over years, this report is defaulted to give you from any time. Maybe you need it to be from the beginning of time or from 3 years ago to the end of the last month or whatever. So just be careful on those dates. Another report in there is the jobs, time, and mileage. Is you can do an item profitability report. Profit and loss by job is a fun one, depending how many jobs you have. It will give you kind of an income statement look, profit and loss look by job with each column. And another popular one in here, maybe committed costs by a job, estimates by job. The unbilled costs by job, that's where I was saying that if you have time and you say it's billable, but you don't actually attach it to the invoice by the add time and you're just invoicing based off of estimates, that's where this time will kind of accumulate. However, if you are just more of a time and materials and you do add those items specifically to invoices, this is a helpful report to see what's out there that you haven't billed and maybe should be billing. And I think those are the most common time by job or time by name. Those can be interesting as well, and maybe some of these mileage reports. I haven't been involved in using those much, but they might be helpful to you. And I think that really hits what I wanted to talk about. So let me take a quick peek here. I'll close up some windows and let's take a peek at chats. And yes, not a lot of questions in here, but someone's commenting this is definitely different than the online version, and it certainly is. You'll see whenever a client asks if they should, switch over to the online version, the one thing I always tell them is it's not the same look and feel product, just in an internet-based feel. It is actually, QuickBooks had actually acquired some product. That's where their online product came from. It wasn't that they created out of their existing desktop product. Now, it really works in the same mentality and same feel, same that way, but everything looks different. So it's definitely kind of a learning curve, depending especially how technically savvy you are. We do have another seminar coming up on the online version with different topics than I did today, but by our firm, and that is in 2 weeks, I believe, or we can have 2 weeks. So you could certainly look out for that or reach out to me and I can make sure you get invited. Someone makes a good point here that I should make a note to the guests how easy it is to alter QuickBooks. That is absolutely true. So he's saying it's not good if there's many hands involved. QuickBooks, being the basic lower end product that it is very user friendly and easy to change things, which is nice when you made your own mistake, but not so nice when anybody can change anything that they want very easily. So yes, that's certainly something to keep in mind, and makes it important to maybe set some of those user settings where you can keep people out of certain areas if they're not applicable to them, or if you have the enterprise, there's actually some extra special user settings, a lot more capability of manipulating setting which things different roles in, say, your accounting department can access. And yep, one of my favorites that someone's pointing out, I will mention, under company, set closing date. This is another way to keep anyone from changing the past. If you set this date and password, it doesn't mean everyone's locked out of, say, your year end or month end is done and you want to accept that closing date. It just means that if you're going to change anything prior to that date, now you have to know the password. So hopefully only one person has that password. We've actually had some clients where we tell them to put the password in an envelope and don't open the envelope unless you talk to us. Because once we've done the tax return or closed the year down, we don't want you to change the year for any reason unless it means we're going to do a amended tax return or something. Now, if it's on just a month during the year, we don't care as much there, but you might care others in your firm are changing things. So yeah, those are definitely things I've done. A lot of different QuickBooks presentations in the past that were totally different topics than today. It was more tips and tricks. Today was more inventory based and the job cost. So that topic is always in my other tips and tricks presentations. I guess on that note, if any other questions come up, feel free to reach out, give me a call, shoot me an email. My contact information should be in the PowerPoint you should have received, or you know how to find us. So thanks for joining us today and have a great day.